Hello everyone and welcome to Day Trader S&P 500. Today is May 9th, 2021, Mother's Day in America, so happy Mother's Day to all the mothers out there. This is Dale Woodson, editor of Woodson Wave Report, one of Timer Digest's top rank stock market newsletters. You can see our honor roll accomplishments over the years there and our disclaimer. I want to let you guys know we've been in business since 1997 and let you know about the annual and monthly subscription rates there. And while we're thinking about it, we want to thank you guys for patronizing the channel. Thank you for hitting the subscribe button, the reminder bell, and the like button, which showed up right there. Okay, it's a beautiful thing. Okay, let's get into today. We are going to talk about the S&P, NASDAQ, Qs, the Dow, US 10-year Treasury yields, and as always, Tesla. So let's get right into it. On the S&P, I want to look at this big picture again, once for all of our new subscribers, and a little review here. This is a weekly log chart of the S&P. This is the 1987 low. This is the wave 1 high. This is the wave 2 low. Well, wave 1 high in 2007. And the wave 2 low in, wave 1 high in 2000. Then we had the move down into the 2009 low. That was wave 2. We had a wave 3 up here, which topped in 2018. We had the expanding triangle wave 4, and we're up in wave 5 now. And I want to look, this again could be 5 all the way from the 1987 low, or it could be 1 of 5. Once that decline begins in earnest, we'll be able to tell relatively early in the pattern if it's such a minor degree or a major degree decline. But I want to point out these multiples here from that 87 low. You can see where this 1 and 1618 and 2618 literally stopped the market for a period of time. And I want to get into that just to show you guys exactly what it did. Okay, so we can look at this here from, it just touched it back in July or August of 2014, and it didn't really bounce off of it until June of 16, almost 2 years later. Okay, that was a long sideways correction. Looks like a triangle itself. Okay, and then we get here to the January 2018 high, and by the way, this was a perfect Fibonacci multiple from the 2009 low, and we discovered that expanding triangle pattern early in the pattern, and it played out perfectly. But you can see here, if you look from the very beginning in January of 2018, when the market first hit this multiple, it didn't really get above it, even though it got above it, but it gave up, lower lows, higher highs and lower lows. That's the definition of an expanding triangle. But it didn't really start pushing above until May of 2020. So we had another long period of struggling with that multiple. And this is from January of 18 to May of 2020. That's 2.5 years. Here we are again. Now we're at the 2.618 multiple. Yeah, it's okay if it goes above it a little bit, but this should at least make the market go sideways, if not down, for a period of time. And if it's anything like the other two, we could look for a couple years of sideways to down market action as this Fibonacci multiple grinds the market to a halt. We'll see how that plays out, what degree of trend this is, but we'll know that again early in the pattern. All right, I want to jump up to more current times. In our most recent low of March the 4th, you can see right there, I've got it marked in a red line. We've got a 1 up, a 2 down, a 3 up, and a 4th wave decline. And as you know, last week, the market moved above those April 29th spike high. Okay, so this 3rd wave here extended. And I want to get a look at this retracement here, because as I've been saying, these retracements have been minuscule to say the least. And you can see this one went to the 236 retracement level, okay, almost right on it. and we're coming nowhere near the 382, the 500, or the 618. I usually only use those three because they're most commonly hit, most often hit, but lately the market on the pullbacks is going to the 236 on the way up, the pullbacks for the down move, and then the pullbacks for the declines are going all the way up to the 786. So I'm including those because they're hitting. And that tells you something. If the pullbacks on the decline, the moves up are retracing 786, and the moves down are tracing 236, the trend's still up because of the degree of the pullbacks. They're nothing on the way up, and they're everything on the way down. Okay, so we're looking at that market there, and I'm going to touch on our Fibonacci turn time spirals from this 3-4 low. Let me see if I have that here for you guys. Is that yeah, that's from the 3-4 low. Okay, so you can see the market's been spinning from that low. You can see the first target was 317, a direct hit on the wave 1 high. The next one was 325, a direct hit on the wave 2 low. The next one was 4.6. You can see that stopped the market sideways there. This is 1, 2, 3, 4, 5 within here. The next one was 4.28, and on 4.29 at the open, and it's a 1 minute tick, it made a new high. That means that it also sent the market down, as you can see. Was it the ultimate high? No. Was it a high that led to a sideways or retracement? Yes. So that target did hit within 1 minute, and now it's gone higher. And next high in the sequence is the 89-day spiral, which is June 1st. Will that be the next high? We will see. This thing is developing here, 1, 2, and then I think I got that on a shorter term there, 1, 2, 3, 4, 5, where that thing is unfolding as we speak. Let me look and see if I put that in. Maybe I did, maybe I didn't. Let me look here. No, and there it is there on a 1 minute. Okay, you can see that 1, 2, 3. Here's another fourth wave, 236 retracement. Then we get a 4 and 5 up here equals 1 at 42.62. Okay, so that's what we're looking at there. That's a 1 minute chart from that most recent May 6th low. You can see 1, 2, 3 up there, 4, and I have, again, 236 retracement. 5 equals 1 at 42.62. So that takes care of the S&P going from the March 4 low and from this May low. Okay, I want to look at the Dow real quick here. And I'm sorry, that's the wrong one. Let's go straight into the NASDAQ, okay? On the NASDAQ, here is that April 29th spike high. And you can see I got divergence here because as the S&P and the Dow moved to new highs, the NASDAQ did not. Okay, so we're still looking at a decline. And the indexes don't all have to top on the same day. It's very possible that the NASDAQ has already topped and the Dow and S&P will top later. I remember in 2000, the S&P and the NASDAQ topped in March and the Dow topped in January. And in 2007, one of the indexes topped in October, and I think the next one was a month later. So like in 87, they all topped at the same time, same day, and crashed together. That doesn't have to happen. There's no rule that says the markets have to top on the same day. Okay, so we'll see how the NASDAQ plays out. This looks like a 1, 2, 3, 4, 5 here. Let me label that for you guys. Let's get that impulse pattern going. And we've got a 1 up, a 2 down, a 3 up, a 4 down, and a 5 up there. Let's see what retracement we have here. Okay. Let's see here. We get a 382 retracement there. Okay, so let's see how that plays out. I want to look at this unfolding here, this move down. So let me get extensions here. Okay, there we go. There's a 1, 2, and a 1, 2, 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 5. Okay, that's a multiple. Okay, so let's do this then. Let's see what the retracement is of that, because that's a full extension of 5 waves, 9 down, okay? And here we have the retracement is right at the 50%. Okay, we've got an ABC. We'll see how that plays out. And let's get rid of that and look at, let's say, if that high is indeed in place, and that's wave 1 down, we should get another 5 waves to the downside. There's 1 or A, there is 2 or B. So if that is in place at the 50% retracement right there, we're looking at 13,066, where 3 or C equals 1 or A, and we have 12,593 for the 1.618 retracement. So let me just put that in there for you guys. I'll use the 1, 2, 3, 4, 5. Okay, we got 1 there, 2, 3 could be here, and then we get a 4 and a 5, or it could go down to the 1.618. We'll see how that plays out. Compare that to the Qs. I believe it's the same pattern. Okay, so let's get targets for that down from that all-time high, and there's 1 or A, 2 or B, and this might not be to the point, but we have targets of 319.99, basically 320, and then 309 over here. Okay, I want to look at the Dow, okay? And on the Dow, this line here is the fib multiple from the 1987 low. Okay, what is that? It is this one here. It's the same line, okay? It's that extension coming down from the 1987 low. Let me get that back into scope for you guys. There we go. That's a, well, there we go. That's a little better. 1, 2, 3, 4, 5. Again, stopped, stopped, stopped. So on the Dow, let me get it back here. That is that line there. There is the March 4 low. Okay, there's 1 down and 2 up. And it looks like 3 hit to right there. Let me get my extension tool on there and see what that looks like. Okay, there is 1. There is 2. Yeah, and you can see 3 hit right on it. So we can look for a 4th wave pullback and then a 5th wave higher from the 4th wave low. Let's see what that Fibonacci retracement is of that 3rd wave, and we'll get it right here, and there it is, and that's right on the 382, and you can see all of that. I'm sorry, it hasn't hit there yet. The 382 is right there at 3370. I'm sorry, 33,774. That would be a nice place for that to stop, right in all that accumulation right there. The 236 is at the upper end of that pattern, and that's at 34,170. We have further Fibonacci multiples or retracements. 50% is 33,453. The 618 is 33,133. So look for a pullback on 4 and then a 5 to new highs. Okay, I wanted to touch on that Fibonacci multiple again. Okay, because that is the next turn date. If this continues, it's going to mark high, 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 much like the Fibonacci sequence did for the, where is that other pattern? And oh, here, I wanted to show you guys this too. We put this out to our subscribers last week. This was our alternate pattern, if you will, that 3 extended, and this was 4, and we'd get a 5 to a new all-time high, and that did play out. So that's what we were looking at there. I want to look at that that one from the September low. Okay, there we go, and here we go, the 4-hour bar from the September high. I'm sorry, the wave 3 high. This one so far has been working for 7 months. It may continue to work. We're going to see how that plays out. The longest time I had one work was the 1999 spiral that went to 2006 and lasted 7 years. This one so far is working for 7 months. You can see it was catching alternating highs and lows till the 4th wave low on October 30th. Then it caught that spike there, not the actual wave high, but a spike before it went down, spike before it went down, spike before it went down. and the 429, which was within 1 minute, caught that one. The turn date was actually the 28th, and it hit on the 29th. This one was actually on the 23rd. It was the other one. But anyway, it caught this move. The main thing I want to get to in this chart here is the next turn date in this sequence from the September 2020 high is September 14, where in the other one we've got June 1st. So it's going to be interesting to see how this plays out. How long is this going to go up? How far? Will it go into June? Will it go into September? Will it make another high in June, then a pullback, then another one in September? We'll see how it plays out. But these time spirals have served us well, and they should continue to serve us well. For what it's worth, Woodson Wave Report, I want to show you with this this alternate count we had here. We were short for a whole 3 days. I think it was 3 days last week. And that was just in the short term. We stayed long in the long term, never moved off because it didn't hit our make or break target, and we moved that up as of Friday. But we are back to a long position with that move to new highs in the short term and intermediate term, and we never moved off the long position in the long term. So I want to make sure I stated that right. We are long at all degrees of trend on our newsletter for our subscribers. Okay, let's get that out of the way. And we want to look at the 10-year yield. Okay, here we have from the March lows, we have a 1 up, a 2 down, a 3 up, and this 3 still could be going higher. And then we've got this spike on Friday. If you remember, they had the horrible jobs number, which well, I'll get into that later, but the horrible jobs number, the 10-year, all the interest rates spiked down, and you can see that's a black bar. They ended up on the day. That's up in yield, up in interest rates, and but they spiked way down. Okay, so that just so happened to, there's no coincidences, hit right on the 236 retracement. If this market is going to be like the S&P and the other indexes, then the pullbacks on the way up are going to be thin, they're going to be short, they're hitting on the 236, and that is 4 and will go up to 5. Okay, so if this extends down further, you can see there's 2 Fibonacci targets at the that's the 382, and that's where that third wave or C wave gains a 1.618, and that's right on 1.28, I think it's 9 for the interest rates. Okay, but let's see how this plays out here. Let me get this out of the way, and let's do a fifth wave high, see if it gains equality with 1, where it gains equality with 1 when this resumes. There is our third wave. You can see, I'm going to leave this here. The third wave could still go up to here, but that's a pretty decent decline. But let's see where this would take our, not that one, guys. Let's get this one here. There it is. Let's say that is it right there at the 236. And you can see that 5 will gain equality with 1 when 10-year rates are at 2.383. We'll see how that plays out. Okay, that's it for the 10-year treasuries. We're going to look at Tesla as usual. You can see we've got 5 waves down. We've got the 900 high on January 25. We've got the 5 wave down A low on March 5 at 539. And did you guys see Elon Musk on Saturday Night Live? By the way, a quick story here. I remember back in the late 90s, maybe 2000, Maria Bartiromo was on the floor of the New York Stock Exchange reporting all the time. Then she started making all the late night talk shows as a rock star. And whenever you see the finance industry spill over into the mainstream media, the talk shows, the comedy shows like Saturday Night Live, that's another sign of a top. It's like everybody's in. They're trying to get everybody in. They talked about Dogecoin. And anyway, it's very interesting. We'll see. It doesn't mean it's to the day, but it's in this time period, rough time period. The top is near. Okay, and all signs are pointing to it. All right, here is that B wave high. You know, I regress. I apologize for that. And then we've got this developing from, I believe it was April 14. Yeah, April 14. So we'll go look at the shorter term. That is the April 14 high. We could call this a leading diagonal triangle with a 1, 2, 3, 4, 5, where 4 overlaps 1, and that would be 1 or A down. There's the retracement up, and again, we've got another 5-wave pattern here. Okay, we're looking at, again, the target is, come on, bring it in. We're going slowly. There it is at 418. It should be easier to see over here. Yeah, 418. But we're going to see how this plays out. This could be 1, 2. If this is 3, it'll have to hold below that wave 1 low. By the way, see this dotted line in here? All right, that's the low of this wave 1. This wave 4 cannot go above that wave 1, and it didn't by just, I think it's a point or less, okay? So we had a 1, 2, 3, 4 holds below 1 at that dotted line there, and then 5. Okay, let's look at the retracement levels here. You can see we've already hit between the 236 and the 382. The 382 is at 688.90. The 500 is 701. The 618 is 713. But if this is 1, 2, 3, 4, 5, let me mark that for you guys. Okay, here we go. If this is 1, 2, 3, 4, 5, we have a 1 there, and a 2 up there, and a 3 down here, and 4 would have to be about right in here. Because again, there's that wave 1 low. I'll leave that dotted line in there. Okay, 4 cannot go above that dotted line. Okay, if this is correct, we'll see how that plays out. Ideally, it goes to the 382 at 688.98. We're going to have to watch that go. And then this could be 1 and 2, and then this third wave could be extending 1 and then 2 again, and then 3, 4, 5 down to our ultimate target of 418. Okay, that's what we're looking at. A quick little review here. Here's our turn dates. The next one in this sequence is September 14th of 2021. If you guys want to extrapolate even further, I did this a long time ago. The next one is May of 2022. We'll see if this keeps marking highs. That's from the September 20 low. We want to get a little bit closer. We'll look at things from the March 4 low, and you can see the next turn date in that sequence is June 1st of 2021. We'll see how that plays out. All right, thank you guys again, and until next time, take care, everyone.